Recently, there have been claims about Cardano ADA stealing Bitcoin's spotlight and making a remarkable feat for itself. Of course, those claims collided with a slew of doubts from the crypto community, especially those who consider Cardano's achievements too petty. It seems insignificant now since the crypto market is highly subject to volatility. However, Cardano has been behind the scenes, gaining significant momentum. So watch your backs because the next big thing might just be Cardano ADA. The Bitcoin price is languishing under $30,000 per Bitcoin, in part due to fears in the US is waging a secret war against crypto. Plus, there has been news about Microsoft and Elon Musk getting set to blow up the crypto market. But down to the main issue. A leak has revealed that the US President Joe Biden could be about to issue an executive order on artificial intelligence that could have a serious spillover to Bitcoin and crypto, setting alarm bells ringing, and we're about to launch into another tough hassle. The upcoming White House executive order on AI raises some alarm bells for crypto. Alexander Grieve, head of government affairs at Bitcoin and crypto-focused investment company Paradigm, tweeted, "The report claimed that companies like Microsoft, Google, and Amazon will be forced to disclose when a customer purchases computing resources beyond a certain threshold." Grieve highlighted a part of the report that referred to computing power as a national resource, and that mining Bitcoin, developing video games, and running AI models like ChatGPT all require large amounts of compute. The Bitcoin network, which requires miners to validate transactions in return for freshly created Bitcoin using high-powered computers, is assumed to use more electricity annually than some small countries. Following China's 2021 Bitcoin mining ban, the US has become home to more Bitcoin miners than any other country. Currently, the White House views tech jobs and dev talent and energy as scarce national resources, and therefore zero-sum, particularly crypto. Grieve said that speculating that Bitcoin mining could be considered robbing families of power and working in crypto would take development talent away from real applications. Well, the crypto industry has not been without its hurdles and bumps. Bitcoin is in big trouble if these claims materialize. This makes us wonder whether Cardano might have a chance. Last year, prominent crypto analyst and founder of Into the Cryptoverse, Benjamin Cowan, shared an interesting Bitcoin chart that helped investors determine a point where the price of the first cryptocurrency will finally reverse and the bear market will be no more. The applied metric was known as the bear market cycle peak ROI, which is a useful indicator that can be used to determine the capitulation points of the cycle. By measuring the return on investments from the peak of its current cycle, analysts determine the depth of losses that the market is facing. In comparison to previous bear markets, Bitcoin's ROI drawdown from the all-time high has not been nearly as dramatic as it may seem. At the time, Bitcoin had not yet reached the ROI of previous cycles. However, a drop down from the 0.3 ROI ratio showed that the market has already experienced deep losses and will most likely move towards the acceleration stage. Unfortunately, a further decline is more than possible as the realized loss on the market has not yet reached values attained on the bear market in 2018. Bitcoin, Ethereum, and other assets might still test local lows, particularly if the Fed does not realize its narrative. On-chain and market indicators did not show any sign of immediate recovery. Trading volume, open interest, and other metrics were moving towards their pre-FTX crash values, but were not creating the conditions for a proper recovery rally. The situation is no different now. In his latest crypto market analysis, Benjamin Cowan predicted that altcoins will continue to bleed despite Bitcoin standing strong. The trader even believes that Cardano may drop to as low as 400 satoshis on the ADA Bitcoin chart as the market enters the third quarter. Nonetheless, Cardano versus Bitcoin? Let's take a closer look. Bitcoin was the first cryptocurrency and remains the largest name in the business, while Cardano is a blockchain platform for smart contracts with an ambitious long-term roadmap. With this, is it in fact possible for Bitcoin to feel threatened by Cardano? Both of these digital coins soared in 2021 and crashed in the first half of 2022. That's a long story, but you all would know what happened to Terra Luna in 2022. Generally speaking, Bitcoin's price drop has been tied to the same investor fears that weigh on Wall Street's growth stocks. Inflation is skyrocketing in America and around the world. Government is lifting interest rates to fight inflation, which has been bad news for growth stocks and cryptocurrencies thus far. People are looking to limit their exposure to financial risk these days, and that strategy includes stepping back from volatile investments. These concerns tend to drag Bitcoin down, making it seem like it's under severe pressure. There are brighter days ahead, maybe not right away, but in the long run. However, the truth remains that the beaten down crypto sector will make a comeback. Bitcoin's function as a simple payment system and ultra-secure system for storage of economic value is crucial to the future of decentralized finance, Web3, and the metaverse. We need to be thinking about the future. Other cryptocurrencies serve a similar function, but none can match Bitcoin's massive market footprint. On the other hand, Cardano is compatible with smart contracts developed for the market-leading Ethereum platform, even though the system was not built to meet the ERC20 token standard from the start. There has been plenty of updates on Cardano and so much good stuff to say about it. Cardano already supports decentralized lending and borrowing functions, yield farming protocols, non-fungible tokens, and much more. However, so many things need to go right for Cardano, and it's highly dependent on Bitcoin's performance. It cannot travel alone in this tumultuous crypto journey. If Bitcoin provides the capital of the future, then Cardano is poised to deliver a lot of the functionality of decentralized banking and transaction services. This is where we clear the air. Cardano ADA is not trying to kill or replace Ethereum, which looks likely to remain the overall market leader for smart contracts. Instead, Cardano gives app developers access to unique elements and features along high-speed processing of transactions and smart contracts. There are no losers in this race. Cardano appeals to a different type of investor than Bitcoin, offering larger potential returns in a more competitive subsector. There just simply are no threats here. Nevertheless, the common problem that most cryptocurrencies need to combat is acceptance. Several criticisms have been labeled against crypto, and there's no end to them soon. In a certain tweet, prominent economist Nouriel Roubini argued that all cryptocurrencies will go extinct due to the high risk embedded in the industry. The prediction came in response to an article published by media outlet Axios, which explored how rampant risk-seeking behavior made the current implosion inevitable. The article suggested that the global financial crisis of 2008 was caused by a boring finance industry being overtaken by players who were willing to make risky bets. Furthermore, Nick Dunbar, the founder and editor of Risky Finance, argued that the majority of people are risk-adverse, meaning that their goal is not to lose money. At the same time, there is a small minority of people with extremely high tolerance for risk. Given that the crypto industry mainly attracts people, the crypto industry remains prone to blowups. While some lawmakers are clamoring for more regulatory scrutiny, some claim that crypto has to remain unregulated despite perceived risks. As a result, the cryptocurrency industry would not be able to gain much coveted legitimacy. During the FTX fiasco, Roubini warned that several other prominent crypto companies are now at risk of bankruptcy, meaning that FTX might not be the first domino to fall. We have seen a great deal of falls this year, starting from the crypto banks. Can crypto eventually go to zero? Well, one reason Bitcoin is not likely to hit zero is its increasing adoption, mainstream acceptance, and the growth of its network. Over the past few years, more individuals and institutions have started to invest in Bitcoin, recognizing its potential as a store of value and a means of exchange. Although the future price of Bitcoin is impossible to predict with any amount of accuracy, the combination of these factors make it much more likely that Bitcoin will continue to rise in value over time rather than hit zero. There's just simply no telling when the tide would change, and anyone who claims to know is just playing around guesses. As Bitcoin proves its resiliency and attractiveness as a store of value, its potential upside over the long term does look very attractive. And of course, the same sentiment applies to Cardano too. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and of course, we'll see you in the next video.